Hello, Face. How's everyone doing today? Let's have a very good week. Starting off, very interesting. The news of the evening, of course, was the trade deal possibly blowing up. Maybe it's a ploy by Trump, by our president, of showing he's going to play hardball. So Blake said there was a possibility of the trade deal blowing up. Okay, so none of us were sure what the catalyst would be. It was reasonable to think it was China, and who knows, it still could be, and who knows what we're hearing, if it's the real reasons. But here's my thoughts in the S&Ps. So if you go back to Friday, besides if you were bearish, before you had this candle, you're closing right here. Here's the closing candle Friday. So unless you were bearish and you said, I just wanted to be short, we did have some divergence here, but, most people going home Friday thought another new high was a given. And who knows, look, we're holding this 200 here on the 4-hour. But my belief is, because there was no real good price action, like a reversal day or any kind of warning for what happened here today, that a lot of longs are trapped because of a good close on Friday. And then they, maybe they weren't paying attention last night. Now they see the S&P's down 46. We're trying to hold here underneath this level. Big problems. I think rallies, if they do try and rally, it should be contained at 29.30. Maybe we get a 40 handle rally. And I just want to show you guys something. Let me get rid of this. Computer's a little slow here today. Okay. Look at this. Okay. Anyway, Blake's stop survived. Nice call, Blake. So you had a feeling what might happen fundamentally, and you had a feeling technically to take a shot up there between there and 30. Nice job, man. So, don't you think it'd be worth, I don't know, some money to have had this before the event? So, maybe Blake will talk about what he was seeing, because, I certainly didn't see anything there except being bearish and having underwater bearish positions. But you see, this is why I say it's one of the best teams. You know what? Forget it, one of it. It's the best team I've ever been on. Because no one gets cold at the same time. Okay, you might get cold, but none of these guys all at the same time get cold. So, that's the beauty. Actually, what we're offering is diversification in trading with all of our analysts and different disciplines that they trade. So let's see, a couple other things I just want to touch upon. The yen left a nice gap. Maybe we don't even fill it. Okay, so this is the only currency that still, has a gap from last night. Pretty negative. I don't think this is it in the yen. Okay, we may try and hold here, but, perhaps all we do is try and gap fill. It'll be more bearish, and I'm going to give things like a day, it's a bank holiday, and see what happens in here tomorrow for a turnaround Tuesday in US dollar yen. Crude, a nice call by Grega. Grega said, there'd be one more low. I think he had 59.80. 86. So clean it up, Grega. You're off 14 pips. So perhaps I covered shorts from Friday last night. Something else that you may want to consider. You guys know I like to fade news. I was talking about it on the strong jobs report to fade the dollar. You was talking about when the euro was reversing early after the number. But here's something to do when you're in a position. Okay, Garcia or Gark. When you have news that goes your way and you have windfall profits on a news event, I think you have to take at least something off the board. I mean, I do. You don't necessarily fade it, but if it's going your way, it's news related, just in case it's a buy the rumor, sell the fact, or, sell the rumor, buy the fact, you take something off. Okay. Everyone with me on that? You may want to write it down. When news brings me windfall profits, take partials. Okay. I teach it. Because I'm sure, there are a lot of people that covered last night and they might be happy so far. At 2,900, you could have gotten out, covered shorts after this candle, and we're right back to it. But now, how do you get on board? What if you're waiting for a rally that doesn't happen? So if you keep a piece, you've already rang the register. So you should have a free trade and even a profit stop, right? But if you get rid of everything, and I do this, I still do it, and you turn your head because you think there'll be a rally to sell, you're distracted in something else, you don't sell the rally, and then you're, 2780, 2800 in a few days, 2770. Okay, I think this is going to be a magnet. Here's the first magnet after we try and hold here, 2860, and here's the same magnet again. Actually, I think what would be pretty bullish would be to just wash out under 2720, but I'm going to watch these moving averages. And the last thing I'm going to talk about is Dr. Copper held so far where it had to, and it's bouncing. Okay, see? Went right through this moving average. We're above it. Do I think this is a major low in copper? I really don't. Okay. So I would use recoveries in risk to short copper, being wrong, say back over 292. The 2-week off number is right up there around 289. Here it is. You count back a couple. 280, 288.40. So any rally up there, I'll be giving it a shot. Everyone clear with what I have to say before I turn it up, what I said? I think there are a lot of people. Okay, I like that. 2/3 to pay yourself. Okay, then 1/3 for the greed. So there's only 1/3 of you that's greedy, Rick. But that's manageable. A lot of people are 100% greedy. You're only 33 1/3. Reedy. Okay, got it. Hi, Blake. How are you today, buddy? Nice call on S&Ps.
Good morning.
Good morning.
Happy Monday to you.
Yeah.
Yeah. So nice, what's that?
Nice trade. Nice S&P pip.
It was actually here. I'll put it. I'll tell you when we initiated it.
Okay.
Where am I? It wasn't. It was interesting. I was sitting here. Let's see. Where am I at? Okay. So it was initiated right here, actually, but the stops were put out over the ascending wedge highs.
Okay.
So it was the ascending wedge, big double top, false breakout to the upside, blah 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 blah.
Yeah,
And
you probably expected to be stopped out this week, didn't you? With
yeah,
Friday's close.
I was thinking, oh man,
Yeah.
it's just another one of those false breakdowns. But it still can be. This is a big week for the
Yeah.
China-U.S. negotiation. So just um,
China's got problems, Blake, with their pork population. It's almost like Ebola that has spread through it, and that's their number one protein source. It's their, besides soybeans. And they're going to have to import a lot of pork to make up for the deficit. When food prices go up in China, people aren't real happy there. So they may need a deal with us now because of agriculture. Just throwing it out there.
and they may. I mean, we still, from what I understand, there's still delegations and coming here, and it's hard to understand exactly what the thought process is of President Trump, and I have no idea what he's thinking. And a lot of people, you look at the North American, trade right now, and you can see the S&Ps are stable. So no one's coming in and selling S&Ps right now. And, the market's probably looking at this as being, look, this is just, posturing ahead of the deal, making sure that one gets done or else. I mean, Donald Trump, he's got to move ahead into his efforts into the 2020 election, and the best way for him to do that is to make sure that he has secured a China-U.S. trade deal, at least some sort of deal. He'll always call the deal good, whether it ultimately is good or bad for us, it doesn't really matter. It's just a deal has been done, and he'll campaign on it. But he needs something to get done. And like I said, this might be just some, of him just making threats just to make sure
Yard
that
of the deal, Blake.
Yeah, I guess. I guess.
Yeah. I know.
You can't write off the stock market just yet. Technically, it looks like we're breaking lower, but we're making lower highs, lower lows. So technically, it looks bearish. Hold on, really quick. My volume's really loud. My office speakers. But like I said, I don't think you can write off the stock market just yet. And if a deal gets done this week, which this is the week that everybody expects, it's go or no go. Right. So this week is going to be a very big week for the markets. I think the easiest trade right now, or the easiest, easiest is not the term I meant to use. The most clean trade is going to be the Aussie yen. And right now the Aussie yen, we broke down. We're pivoting back at the breakdown point right now. This is currently where we trade. Let me get rid of this arrow. But I think that a deal gets done, U.S.-China trade deal gets done, we blast right back through these highs. A deal doesn't get done, we turn lower. I mean, that's it, right? It's pretty clean. And the Aussie, now I know we have the RBA coming up tonight. I understand that. And by the way, speaking of the RBA, I have to think that some of these comments over the weekend with U.S. China, comments might tilt the RBA a little bit more dovish going into tonight. At least the risk is, for them to be more dovish, maybe even cut. But this is a really, really important level that we're at. But I do think that this is going to be the cleanest trade. So if a deal does get done, you have to buy the Aussie yen, and the deal, and that doesn't mean it's something that, like for me, I'd probably trade the Aussie yen to the upside and let it play out for a few days, and then I'd look to short it. That's how I'd play it. But if a deal doesn't get done, the Aussie yen is probably going to revisit these levels again, down here. And does that mean you short the Aussie yen right now? I mean, you could, but I think, once we get some clarity, a deal does not get done, Aussie yen's a good short. A deal gets done, the Aussie yen's going to be a good long, and I think we have to approach it like that. Now,
Blake,
yo,
sorry to interrupt. Good morning.
No,
maybe if something's going to be happening, which it does look like something's going to be happening in this pair, maybe the way to trade this is to buy a straddle or something.
Yeah, you could. If you trade FX options, I don't talk a lot about options just because I don't trade them. I trade just cash currency, me personally. But yes, that would be a good way to employ, looking for some near-term volatility, knowing that there is going to be some volatility by the end of the week. So short-dated straddles might be the way to go. I mean, although
I'm guessing volatility is going to be pretty high. Implied vol is going to be pretty high, so they might be expensive.
They might be a little pricey. Sure. Yeah. No, I mean, but we are, expecting something to happen. So, that might be the way to go. So that's a good idea, Stelios, and maybe something that anybody who has an options account in FX would maybe at least explore and see. Look at the dollar yen. Dollar yen spiking up right now. Here's the dollar yen making a little bit of a move. You can see the dollar yen. It's at the highest levels of the session. We're trying to fill this gap. I mean, look at stocks. Stocks are trying. Like I said, here's the dollar yen, right? Here's the S&P, right? S&P is going to try to make a move higher. People look to be optimists here until proven wrong. The market is always going to err on the side of optimism in this environment, and that's a fact. I mean, everybody's going to think, a deal is going to eventually get done. It's going to be it's going to be for the good of everybody. So you can see the stocks are, naturally just trying to recover at this point. But it was a big shocker over the weekend, gapping down quite a bit. Dollar behaved as it should. It strengthened against most of the majors. And we saw, the euro slump initially. Now the euro has recovered. The cable, I'm not too sure why the cable is just so pressured right at this moment, but we also have, before we go too far on this, the pound's got probably some sort of, descending wedge. Something looks like that, but no need to be bullish at this point with the cable. And the Aussie is just kind of stationary. I think the Aussie is really going to be waiting on the RBA tonight, and the Kiwi is just trading a little heavier as a result. But because we also have the RBNZ this week. But you can see the dollar yen. The dollar yen's trying to make a nice little recovery here. The dollar yen might actually squeeze past 111 and try to fill this gap completely. I think that's entirely possible with this pair, especially if you're looking at what the S&Ps are doing. But just remember, this is going to be a very important week for the China-U.S. Trade deal, and I think Charlie Munger says U.S. President Donald Trump is not totally crazy to want higher tariffs on some goods.
Yeah, he's only partially crazy, yeah.
Only partially. All right. Yeah, and there's Becky Quick on CNBC keeps saying that China is still coming. That means they're still coming to negotiate. So that's spiking up the dollar yen right now. And the China negotiators are probably en route and still going to put forth their best effort, try to put together some sort of deal. So and I think that's what's spiking up the dollar yen currently at this point. So the FX market is preparing for the best, hoping for the best, and I don't think it's I think it's brushing off the worst case scenario at this stage of the game. I bet you volatility will probably slump today. I mean, volatility is obviously spiked up. We'll probably see volatility pair these gains, and probably slump back to 15, 16, somewhere down in this neighborhood as the market attempts to recover some of these losses. again, you have to imagine we are going in a North American trade. You had the S&P that's generally just it's been very strong. I mean, we were down 3% at worst, I think, down here. And now, we're only down 1.5%. So we're recovering a lot of these losses until we get some sort of indication that, the trade negotiations are completely off the table. The S&P is going to brush off all this bad news near term, I would think. So anyway, just have to think about that as we move into today, and that might give us some room for recovery, and not only the dollar yen, but if you take a look at the euro yen's already trying to fill the gap. I mean, this thing opened up about 70 pips lower, and then we've already recovered quite a bit. Excuse me. Yeah, 70, 80 pips lower, and we're only down like 20 some odd pips on the session. Pound yen looks pretty heavy just because the cable's trading heavy. The Aussie yen, we opened up way down here, and you can see the Aussie yen's trying to stage a recovery as well. And remember, this could end up being a false breakdown too, and that's something to take into consideration if you're trading the Aussie yen, because if a deal does get done, and you have this false breakdown, let me get rid of this fib. This false breakdown, a move back above the 78 level would be a pretty bullish situation in the Aussie yen, especially if a deal does manage to get done. Kiwi yen also recovering off the 50% retracement, and the Canadian yen, we had a push down towards all this pretty key support through here, and we could see a recovery back here as well. I would assume the emerging market currencies may start to rally once again. You might see the Canadian recover as well. So like I said, it's hard to get too carried away at this point in time and too bearish without having any clear indication that the market has, that China and the China-U.S. trade negotiations have completely gone south. One thing I'd like to keep, I know I've looked at a couple of charts, not really giving you many key levels to pay attention to, but I think you should still pay attention to the euro dollar. The dollar index, okay. Remember, it strengthens on risk aversion, and that's what we saw at the open. The euro opened up weaker, the cable opened up weaker, and the cable's actually drifted lower. All those things. But if you look at the euro dollar and what we're developing here, we've got a little inverted head and shoulder pattern. So if the the euro can clear this 112. Was that like 112.10, 112.05? We can clear that resistance here. We might get a move back up towards this resistance here, once again at 112.60. So I think this is very doable, especially knowing how the dollar reacted at the end of the week last week. The dollar closed on a weak note, and that weakness could really continue if we start getting some moves above the 112.05 level in the euro dollar. So I think that's something that we should be paying attention to, because, and I'll reference the dollar index before Steve comes here. Again, you look at the week. You look at the week here. On Friday, we closed real bearish engulfing candle, and I would not be surprised to see the dollar, continue lower later on this session, which means the euro is probably going to trade higher. The pound, probably will start a recovery, sometime here in the next hour or two. The euro will, trade back to 112.30, 40, and you'll see the dollar index, continuing the reversal that we put in on Friday. That wouldn't surprise me at all. And the way it's going to do that, if it's going to do that, is just, seeing stocks, that were down 3% at the open yesterday. You know, the S&P recovers to only down 0.5%. That means you're probably going to see some dollar selling as a result of that. So that's what I'll be looking at today, unless there's some concrete news that we know that, you know, China has called everything off and their delegation is headed back to Beijing. If we get some sort of indication that happened, then things are going to turn nasty once again. But unless we get some clear-cut indication of that, you have to just assume that the market's going to recover here. So, all right, well, that's really what I wanted to say about the markets overall, and I really wanted to make sure that you guys at home weren't getting too bared up here, unless we have reason to, unless we have real reason to. I mean, obviously, Donald Trump wants to raise tariffs on all these different goods, but that's him trying to spur his way of trying to spur and ignite a fire underneath these negotiators to make sure that they get it, you know, China, you know, bends the knee and you know, get something done in concrete and in writing. So
David Brady would say that's the wrong tactic, that China will never kowtow to Trump.
You know, and he may very well be right, but as you pointed out, you know, maybe it's an agricultural issue. Maybe it is. I mean, I think I kind of agree with David Brady, and you heard my comments on Friday, where, you know, if I was China, I would say, hey, let's get rid of this Donald Trump. He's been a thorn in our side. Let's make sure he's not re-electable, and let's power through the next year and a half. And a quite possibly weaker economy, but I think we have the means to do it. And let's just pull our negotiation team. And if China really wanted to get to Trump, that's how I think they should do it. But you know, that's neither here nor there. I'm just saying that I think that would be a wiser decision for China if they really wanted to, you know, make Trump unelectable. But, you know, I don't know the inner workings of what China's dealing with, and maybe they're not even in a position to do that. So, but anyway, so I'm gonna pass it over to my colleague Steven Stelios. Good morning, gentlemen. How you guys doing?
Hello. Good morning.
Good morning. Hello. I mean, that was something to wake up to on Sunday, huh?
Absolutely.
Yeah, some nice little jiggle action in the markets over the weekend, and nice little gap down. So how do you guys feel about where we're at?
Well, personally, you know, we've been discussing about this on the chat room as well, but you know, Trump is many things. I think patient is not one of them. So I've been trying to think about what might be going through his head. And, you know, it's like the movies, you know, you have the table with two people, you know, negotiating on either side of it. And suddenly one of the two people is getting impatient. So what does he do? He puts out a gun and puts it on the table, right? This is, you know, probably what Trump wants to do, and put pressure. So will it be just a tactic to make things, you know, to speed things up and to make the Chinese comply, let's say? Maybe, you know. So I agree with you. I don't think this is the time to get overly bearish at the moment until we see what happens within the next week, because there's the meeting is still on.
Right. Yeah. You gotta see if China, you know, walks away from the table, or if they're gonna sit down and, you know, try to speed this process up. So what do you think, Steve?
You never know with Trump. I mean, anything is on the table, from being optimistic that there's going to be a trade and wanting to show ahead of a trade deal, and wanting to show ahead of the trade deal that perhaps it happened because he was too tough on negotiations. So that might all be, you know, a charade, to an actual breakdown in the discussions. But as you very well said, Blake, I don't consider this news-driven move with any certainty a change in direction in the markets. We have to wait and see, right?
Yeah, I think so. So anyway, well, I'm gonna pass it over to you guys, and I want to thank everybody for being here this morning. I know it's Monday mornings. Well, for me, are always tough, but it's trying to get back into the groove of things. But you guys have a good trading session, and thanks everybody for being here.
Thank you,
Thank you,
Blake.
Blake.
Good luck, Blake.
Thank you.
And don't forget, our webinar is being sponsored by Forest Park FX. So if you're considering a different brokerage firm, they are the guys to speak to. I'm their client. They're best at what they do, honestly. And you get cashback or an investment for your ForexAnalytix subscription. I totally suggest you speak with Trent, Justin, or whoever.
Help them. Yeah, you know, Steve, they'll help you see the forest from the trees.
Yeah, absolutely. So, Coach, any news before we go to Stelios?
You know, I'm noticing a lot of complacency about this break, and I understand why, because every break holds, and we rally, and anytime you try to get short this market, you know, it's come right back in your face.
Don't forget, there is also a lot at stake here, okay? And we know that when that's the case, if there's going to be an attempt from both sides, no matter how tough they play or whatever, to mend this situation. I mean, I consider that a given.
Just based on Friday's price action, there was not a close to sell on a Friday, and I think a lot of people are trapped. Just my view.
Something, I'm not really surprised that we sold off from here, because the major indices were actually on major resistance areas. I mean, I closed my DAX long and my FTSE long positions. What was it? Either Thursday or Friday, exactly because of that. But I still left my S&P short, and I'm actually considering what I'm going to do here, because it's a good situation for me to lighten up my S&P short once again here.
Okay.
So I'm really considering what I'm going to do. Definitely in the short term, we had a technical break. You can see here the ascending wedge. It's undisputably a bearish break. Now, is there going to be more? It's very likely that there's going to be more. But I want to see how the price action evolves. USD yen also a very nice proxy, and then I'm going to go to Stelios before we resume the charts. I just wanted to also show the USD yen. USD yen, as you very well said, gapped down. It hasn't managed to close that gap yet, and I'm really interested to see. I don't want to see it close the gap and go beyond that. You know what I mean? So,
sure.
I mean, for me to feel more comfortable about this price action, I want to see USD yen holding below the gap, or at least retesting it and then continuing lower. Stelio, what else did we have overnight and European hours morning? Besides, obviously, everybody's now aware of Trump's tweets on the Chinese potential deal.
Well, it's a UK bank holiday, so it's been very, very quiet. We did have some data out of Europe, services PMI.
Most of them positive from what I saw.
Well, actually, no. German services PMI came in marginally better. French in line. The overall EU service PMI was marginally better, but Italy collapsed to 50.4, so just over expansion, just within expansionary area, and Spanish also dropped a lot. So we're seeing again this two-speed Europe, where Germany, I mean, German numbers, granted in the past few months they haven't been very good, but we do see the occasional good number. But this Italian service PMI from 54.4 to 50.4, that was a pretty big drop. For what it's worth. So. And that's it. It's been very, very quiet today, my friend. Really nothing happening.
Yeah, okay.
And we have very little coming up as well. It's
for the rest of the day.
Polo speaking late tonight, but that's about it.
Okay, now before we go to FX, let's go through the indices, since now we have something interesting to talk about. This is the daily picture I was referring to in the S&P. You see that we had the first signal in the middle of last week when we got that daily key reversal As you see, that daily key reversal never got invalidated, simply because the rebound we had on Friday didn't make it to new all-time highs, and today we have a continuation lower. I would assume that we need to move lower than that. 2870 is an important support area, so I would want to see what happens from there, from 2870. There is a very good chance that we're going to test that area at the very least. Obviously, overnight, with what happened, the Shanghai Composite Index completely broke down. This is actually I made in advance a very good assessment of how price action is going to move. This is what we were looking after the triangle to break down, to break higher, then retrace lower, and then continue to the upside because the move higher looked impulsive. But with what happened Sunday, as you see, we invalidated that view, that last part of the view, simply because we gapped below this support resistance area. Shanghai Composite got destroyed overnight. As you see, it closed at minus 5.58, so almost minus 6%. I mean, it's a huge move lower. This is something to consider. The DAX, very nice rejection today. You can see where that rejection came from this ascending channel resistance after making one last thrust above the 61.8. So in essence, like a false signal, but we had this channel to monitor, which in essence kept us the right side of the market, because you really don't want to be buying such a resistance, right? I mean, you can look at the channel as a path higher, even if you have as a given that the move higher is going to resume. You don't want to be buying the extremes of that ascending path, right? So we got that big sell-off. Keep in mind the first area of support here is roughly at 12,050. Okay, below that, obviously 11,800. Huge confluence of supports. It was a huge confluence of resistances. In general, we've seen in the DAX that 11,800 is a very key level. Now, the FTSE had already pulled back in advance. Obviously, one of the reasons was the fact that the cable was overperforming the last 2-3 days, and that is definitely a headwind having to do with the index. Now, the Nikkei, quite a big move lower, but still maintains remains within this ascending channel. I would want to see a break below this confluence of supports. You can see it here: ascending channel support, horizontal support, resistance area, 200 daily moving average, and even the 50 daily moving average, all converging roughly to 21,850. Now, if we see a break below that, then we can be talking about the potential of seeing this kind of a move that I envisioned when we were trading in a triangle. And until that happens, as long as we're above that 21,850 area, you should keep respecting the potential for more upside, because if this acts as support, then we can easily continue higher towards 23,000. As you understand, coming back now to what I was saying about the USD yen, a lot is going to depend on what happens here with this gap, this overnight gap with the USD yen. So if we fill in the gap, and in essence we don't get rejected, we invalidate the potential of a runaway gap of at least a gap down retest and continue lower kind of situation, then probably the Nikkei, not probably, certainly the Nikkei is going to find support there and continue to the upside. Don't lose the big picture here though, which is that the USD yen is trapped in a multi-year symmetrical triangle consolidation. As you see, of course, day by day, the triangle by default is a contracting, of course, formation. The triangle's range keeps being reduced. We now have a range which is roughly from 112.50 down to 108. So the range is now 450 pips. It's wide enough still to have some movement within. But as I said, day by day, it keeps contracting even further. Inevitably, at some point, we're going to see a breakout from this range. And when that happens, probably that's going to be the beginning of some kind of a much, much larger move. Now, from a technical perspective, given the fact that this is a multi-year consolidation after an undeniably very, very strong bullish move, that from a technical perspective would make the potential for a continuation higher, so an eventual break higher, a higher probability scenario. But you know how that is. It's not that anything is written in stone. Still, you should respect, if we do see a breakdown, you should definitely respect it and go along with it instead of trying to fade it. Now, a few more indices and then we can go back to FX. This is, my mistake. Here it is. This is the Australian stock market. That one played out so far quite nicely. A little pennant here. I expected one more thrust higher, perhaps to get rejected from that previous high. That's exactly what happened. It took a little bit more time, but that's exactly what happened. So far, we're getting rejected from there. Now, is this a double top? Absolutely not yet. Okay. Good signal for the bears, the fact that we got rejected from there, but I would at least want to see a move below this horizontal support resistance area for me to get more enthusiastic about the downside. As you see, earlier today we tested the 50 daily moving average. So far we're holding from there. So we need to see more price action here. And here's the Nifty. Nifty trying to do more or less the same thing. False break higher temporarily, finding very tough to actually close above this previous high at 11,760. Bank Nifty also a triangle. That can prove to be bullish if we break above it, but be careful because if we break below this 29,100, we will have a short-term double top here, pointing to a deeper correction lower. So far, the RSI though doesn't really, show that we're really willing to move lower, at least not yet. Now, let's go to the FX markets. Okay, let's begin by the DXY. So having to do with the DXY, is this a false break higher? We've already had this conversation last week. Not yet. Might prove to be one, but it's not yet. We still have a series of higher lows. We got rejected from this ascending channel. Yes, we've broke above this 97.70 clear resistance area, and we didn't manage to hold above it. But I would at least want to see this one low getting knocked out. For example, this one 96.75. If not, the next one, which seems like a more important one here at 95.76, or at least this confluence of supports roughly here at 96.25, before I can get more enthusiastic for any potential for US dollar weakness. I'm a long-term dollar bear, but I have no reason to be one yet. Okay, I want to see a lot more evidence than that. Now, of course, this can be the beginning of something, but from having the potential of being the beginning of something to being something, there's a big distance here. So I'm willing to remain more patient, having to do with that. Now, if we have a look at the metals, and I think silver is one of the most interesting to watch here. We had a nice rebound after a break below 1480. I had explained multiple times why 1480 was a critical area of support. It was a critical area of resistance prior to that, while silver was trading within this rectangle. We broke above it. We kept ascending for some time. Then we started moving lower, and 1480 proved to be quite a hard resistance support to crack. Once we cracked through it, though, we just remained there for like not even 2 days. And Friday we just penetrated through it and closed above it. So Was this a false break lower? Depends. I'm monitoring at this triangle. You can look at it as a descending wedge. You can look at it as whatever you want it to be, but it's definitely a formation worth monitoring. Obviously, if we break above this trend line resistance, then we can start talking about the potential of having seen this break below 1480 being a false break lower, and that opens more upside for silver. So, both scenarios are likely. On the other hand, you want to see a break below this low in order to think that, this knee-jerk reaction on Friday higher was probably nothing more than that. Now, having to do with gold here on the 4-hour chart, finding it hard to crack through 1265 on one hand. On the other hand, as I've explained, I have no reason to take the last part of my position of being short as long as we remain below this previous high, 1289. So as long as we're trading in between, I would, keep respecting the potential for more downside. Now, to another commodity, which is crude. Keep in mind that crude remains within a descending channel. We had a much stronger move lower today. We've already pared back a decent amount of the losses. Keep in mind that this confluence of the 50 and the 200 daily moving average, let's also have a look at it on the 4-hour chart. You can have a better view at it here and see that this was also horizontal support resistance area here exactly at 60. Also, you can consider it a very strong psychological level, right? It's a round number, a big round number, $60. So, so far produced a reaction higher. Now, does this mean that I'm turning bullish? Absolutely not. I'm still short. I'm still comfortably in the money here. I'm hoping for a home run. Otherwise, I would have already taken profits. I mean, I was more than 5% in the money. And we see what happens from here. Keep in mind this 6170 is a horizontal support resistance area. So what's that in the short term? Let me see some questions. Can analyze the cable. Yeah, okay. Cable. Cable has started becoming more interesting. And actually, there is also a potential bullish interpretation here. You can see what, right? You can view this as a pennant, anyhow, a triangle of some kind. You will see that at the same time that we broke above it, we also broke above this descending trend line on the RSI, found support exactly at the 50% fib. So interesting. This was also previous support of this, previous resistance of this descending channel, this time acted as support. So the confluence of this descending channel's resistance and the 50 fib actually is what created, from a technical perspective, this reaction higher. We broke above it. We retested this broken trend line higher again. I would say that I totally understand why somebody would want to be long against this little candlestick shadow low at 129.80. I understand why somebody would want to be long against that. From a risk reward perspective, is an excellent opportunity. Okay, and if for some reason you like the dollar lower from here, if you believe, if you want to jump the gun and believe already that that was a false break higher in the dollar, I think, for example, that among the more mainstream pairs, the cable currently looks a lot better than the euro does. The euro, in essence, hasn't done anything. We still remain within this descending triangle, descending wedge, above this horizontal support area at 111.20, but still below 113 resistance. So, bottom line, I wouldn't be doing anything here with the Euro USD. And if we also want to have a look at what is happening between the euro and pound, you can see that we turned lower, from what it was at April 23rd. Quite an aggressive move lower. So far today, we're seeing a rebound. We obviously have a strong support area here. You can see we found support twice, roughly at 84.80 cents. We are again seeing a reaction from the same area, but definitely if we see, a break below 88, 84.70, let's say, I think that's going to be quite a bearish move, and it's going to show that there's more overperformance from pound against the euro coming. So, as I said, I think being long the pound against the dollar is a better proposition at the moment than being long the euro against the dollar. Now, having said that, I'm not involved with any. I would perhaps consider being a little bit long the cable, but I have other exposure. I'm happy with how my positions are going. I really don't find any reason why I should press my luck there. Now, having to do with what happened in the most affected pairs, having to do with the US-China deal, the Aussie and the Kiwi. Aussie broke below this trend line, still remaining below it. So quite a bearish move here. Of course, somebody can say that, it's a little bit arbitrary how you're going to draw this line, but definitely the fact that Aussie is, if we exclude this spike, because it was literally a spike, if we exclude this spike lower, it remains in multi-year lows. I mean, the last time we were trading that low was in 2016. Okay, so for example, if it closes here today, or a little bit lower from here today, it's going to be, a multi-year low having to do with closing prices. And, this is something to pay attention to. Usually that's not a bullish indication, right? And don't forget that Kiwi actually gave signs of a breakdown earlier than the Aussie did by breaking below this triangle. So I wouldn't be surprised at all to see more weakness coming from both of those pairs. China banned Canadian pork imports, so don't think so. What about Kiwi and Euro Kiwi? Okay, Kiwi we just covered. I just saw your question, but we anyhow covered it. Now, your question, what is happening with Euro Kiwi? Euro Kiwi is still appreciating quite nicely within this ascending channel. That's what's happening. So, am I really enthusiastic about the upside here? No, I'm not. I mean, we were actually monitoring the Euro Kiwi when it was breaking above this descending channel, and we pinpointed that as an interesting opportunity. I didn't take the trade myself. I think Blake had some exposure here. And it remains well bid. But keep in mind that if we zoom out, you can see that this whole period of price action, is more or less something like an expanding triangle, right? So I wouldn't be that much enthusiastic about what's going to happen here in the medium to long term. I don't think we yet have a direction. Of course, you need to respect this rebound as long as the channel is holding, and keep in mind that strong area of resistance is at 171. Of course, we have some more distance to that. And CAD. Okay, let's have a look at both the CAD pairs, meaning you can have a look at the USD CAD, which is boringly doing more or less nothing once again, consolidating above this broken triangle, which was a consolidation above this broken triangle, and all of that is happening within an ascending channel, which has formed within a larger ascending channel. So, go figure. I mean, this is not a pair that is really looking to go somewhere fast. I can tell you that much. We have this trend line in the RSI that is so far stubbornly holding the upside. But obviously, if you want to be something, we break above one formation, we consolidate, and we broke above it again. So the path of least resistance, I think, remains higher. I wouldn't be so enthusiastic. It's not eager to be doing anything I actually opted in to be long the USD NOK. I took profits before the Fed, actually at the highs almost, because this 880 area is a very strong area of resistance. You can see why. So I prefer to be long the USD NOK instead of the USD CAD, and that proved to be a good choice last week. Blake, if you think that the market is going to recover, why don't you close your pip? Says Kostas. Because that's not what he said. He says that there is a chance it's going to recover, but from a technical perspective, we already have a breakdown. So, if he believed that the market is a one-way train, he wouldn't have opened the pip anyhow. I think he wants to see more price action, and I think it's the right thing, Costa. The president has done far better with things than expected in his first 2 years, so I would not be too worried about his tactical and support his strategic, says Craig. Depends on how you see it or what aspects of his presidency you're monitoring. Me, as an independent outsider, literally the independent outsider, I have no stakes. I'm not a Democrat and I'm not a Republican. And if you want my opinion, if I lived in the US, I wouldn't vote for either of those parties. So
you're not welcome here.
So I think as an objectively independent person, I can tell you that
you're going to have to stay in Greece the rest of your life.
Yeah, that's not a good option either, I can tell you. But I can tell you as a fact that I'm not so enthusiastic about where the economy is going, and judging the economy by the measures of Trump himself, candidate Trump. The only things that Trump has to show at the moment is the exact same things that he was accusing Obama of being fake.
Apolitical in here, bro. You know what I mean? Yeah. Anyway, Steve, if you were here, if you did come here, I would love to see you on the Fed. I'd put your name in the hat. You'd be much better than Steve Moore or the guy from Godfather's Pizza.
I think that
as a nominee.
It's not about competence. It's not about competence. It's all about a huge political game. As you understand, the people on the Fed are not incompetent, to be honest.
Yeah.
They seem to be incompetent because what they're doing, is in essence catastrophic. But they know exactly what's happening. But you know how it is. They're fully invested in a Ponzi scheme, and nobody wants to take the political blame for that to finish. So they keep trying to perpetuate. They've actually openly admitted that their goal is to expand the business cycle as much as possible. Which, for people that understand economics, trying to expand a business cycle just to do that, any means necessary, is not the right thing to do. Expansions and contractions are made for a reason. They are the balancing acts of nature, if we can see the economy as a natural phenomenon, you know what I mean? And they help, contractions help imbalances get reduced, and things that are imbalanced to balance again. So obviously,
do you remember when Katerina was having contractions?
She never had, actually. So no.
But they were necessary. I mean, for most mothers to give birth to something new.
She had a C-section. She had to.
I'm just using a metaphor. Yeah.
So I'm telling you, no. But I remember the surgery because I was in the surgery. It was interesting, actually.
All right. All right. Well, so are there any other questions in weekly gold making a bull flag, Steve? Where's your head at on gold before I go to? We have Alba here. She's one of my favorites, and she stepped up because I had a morning cancellation. So I want to thank Alba for being here, and she made some nice forecasts.
This is probably what they're talking about as a bull flag. It is a pennant, actually. Can this be a pennant? Absolutely, it can. Okay. And even from an Elliott wave perspective, I remind you that there are two possible interpretations here. The interpretations are the following. A, that this is a correction itself. All of this triangle is a correction, in which case we're moving lower from there. B, that this is a B of an ABC, so there is one more thrust higher. So there is, I talked about that in my interview as well on a Real Vision. So there is absolutely the chance that this is a pennant which is going to break higher. Regardless, be very careful, because when and if that happens, 1360 is a huge area of resistance. The market might find it quite tough to actually break above it. Now, if that is the case, going back the daily, and then you can start your interview. If that is the case, then what you want to see is gold finding support. Even here, I mean, that might even be the low 1265, and in this case, the technical formation is going to be something like that. Okay.
Needed over 90.
Yeah, and it is a probability. So this is the bullish probability here. Okay, absolutely. In any case, you want to see a break above this descending trend line resistance, and then we can start talking about that scenario more in depth. Until that happens, pay close attention to 1265, because if we break below it, there is more weakness to come. Okay.
Okay, buddy. Nice look.
Okay.
Okay, thank you, Steve.
Thank you.
Hello, Alba. Great to have you back. I really appreciate you pinch hitting today. You're normally a star, but for a star to come in and help me out, I really appreciate it.
Thank you, Dale. Can you hear me now?
Yeah, I could hear you, Alba. How are you today?
Great, and you?
Good, and I believe you're on. It was only about 2 weeks ago, and you were showing a zone on the S&Ps, and I remember saying that, so you're expecting new highs can happen, and there's that green zone, right? Okay, so
yeah. Do you see my screen?
We have the S&Ps up here. So we got to that green zone. Is today's action enough to activate your wolf wave?
Well, we need to. Well, the movement and the rejection was over here.
Right.
We could have take shorts over here. I remember I told you any shorts over here, over this area, was good for me. But if we want to make a technical entrance, we have to wait for the rejection or the lower high.
Okay.
And this is the gap of tonight.
All right.
And the S&P has bounced in a very special trend line.
4 hour.
Well, not trend line, it's a moving average. It's the 200 simple moving average. So if you want to open short, it's okay discretionally, because the price has went back into the wolf wave. But if you want to make a great entrance with a better relation with risk and benefit, then we have to wait for the price to reject this area, or the 38.2, or the 50, or the 71.8, even the 50 moving average.
Okay.
Like this.
Look for a rip. Looking for a rip or a failing rally here to sell into. Got it.
Yeah, I'm waiting for it. Okay. I'm waiting for it. As Estelia said, as I said, the previous interview, market is all about balance, and the correction, it has to be sooner or later. So
yeah, you know what I've noticed? Tell me, I mean, I know you're active on social media and the Twitter feed, that I'm actually noticing complacency on this drop. People saying, well, it could just be a tactic by Trump, and it could end up being resolved, or every break is held, this one probably will too. And I think I don't know what you think, but the action Friday going into the end of the week was not the kind of Friday close I would say, yeah, short the close here Friday, the way it finished. And I bet I'm not the only one that thought that, and makes me think a lot of longs are trapped from late last week.
There was a detail in the daily close here. Well, I have here another wolf wave in 4 hours. This was the Friday's daily close and the closing.
Right.
If you combine it with Fibonacci once, we have a wolf wave. If we have lower highs, I like to combine it with Fibonacci, as I said, as I've done with S&P.
But see what I mean? And it was above 61.8. Okay.
Yeah.
It closed at the high, but it closed at the high. How many people said I'm gonna
against?
Okay. So did you sell that close Friday?
No.
Well, that's what I'm saying.
I had shorts before in the previous week.
Okay.
And I was waiting for the double top that with this pullback wasn't a double top very clean. So I combined it with Fibonacci. And with the gap, the Fibonacci is almost completed, I think. More, yeah. I think here. So right now I'm waiting again for a rejection over here. Dow Jones is weaker than S&P right now.
It has been.
It doesn't even go up to test even 38.2 or whatever. And I have here for you another comparison. Do you remember last time I was here, I put the chart of a trend geometry of another trader who was comparing Russell and S&P and all the divergences.
Yeah, well, there was massive divergence, you were saying.
Yeah.
Yeah.
This chart is about the put-call ratio. This is the CBOE equity put-call ratio. This is the CPCE. And this is more, this is like a sentiment indicator. This sentiment indicator is considered excessively bullish when the put-call ratio is relatively low, and excessively bearish when the put-call ratio is relatively high. So we have here a divergence. We have some descending wedges. Do you call them wedges?
Yes, falling wedges.
And you know, when the breakout, then the S&P goes down. Now we are again in the bottom level, in the lower part. So we can expect a higher movement down for the S&P. That was a chart for David Lariu. He's an economist. And I have them in mind. Also, I have two things to show you from US yen and gold. I agree with Stylianos. Stylianos is the name. We have
you showed the gold. You said you were gold was going to break and then it would rally because the market would sell off, but you were looking to short a rally.
Yeah, I was looking more in this support area. This is a very important support. It's a monthly support. And it has bounced here. But again, we need higher lows to look at the targets. We have this is take profit 1, this is take profit 2, more or less in, let me see the cross.
So you're bullish gold here.
Right now, not. I'm waiting for a bounce.
To sell?
Not for a bounce to buy. Right now, the gaps needs to be filled more or less. So I'm waiting for it. Or if it goes down.
I asked about the gold. You're bullish gold now. That's what you were talking about, right? Gold.
Yeah, right now, gold. Yeah. I'm waiting for a bounce, a higher low.
I see.
more or less over here or over here in 1,273 more or less is the area to go to the targets. I have 2 targets, but I can calculate 2 more. Even in Dow Jones, no, in S&P, I have here the 2 targets, but if it breaks this 200 moving average, I have 2 more here, and I'll tell you why. It will be the extra targets.
Okay. So an acceleration move, you have targets down in the green
in case
boxes.
it breaks the 200 moving average,
Yeah.
it's the same pattern as this one. You see this one? This is the USD yen.
Yeah.
And I'm going to tell you something about the USD yen right now, but look at the yellow wolf wave here.
Yeah.
It has a concrete pattern in a concrete place with the resistance in 0.5 also, and with high with a movement, a bullish movement, previous bullish movement. So I calculate 4 targets. It doesn't matter if the S&P reaches the target 1, target 2, and then goes up. If it rejects the price, or if it makes a lower high below 0.5, you can consider the 4 targets. So it's possible a bounce over here, but if it rejects or makes a lower high, we can consider also one second.
Okay.
These 2 targets. And it wouldn't be crazy. It wouldn't be crazy at all. It would be
Just a correction.
just a correction, yeah. No alarms, because the greatest support line is over here, is over the 2,600. So
Okay.
it could be so we need to wait for the reaction, for the price reaction, and otherwise we need to look in 4 hours if the S&P loses the 200 moving average and make a pullback or something and rejects, to adjust the entrance. But if you make a discretional open short right now, you open shorts right now, it could be great. But always the stop loss be up on 0.5 and up on the previous maximums over here, over here.
Right.
Okay.
Okay.
The S&P, it moves accordingly to the indexes, accordingly. And now I'm going to work this Fibonacci if it wants, and because now it's in the area, in the rejection area. So I'll wait. Also, it conflicts with the gap, to cover the gap. So I'm waiting here, and I put the Fibonacci from this maximum, because I work Fibonacci's from the highest, from the highest high, and I work with 3 impulses, or this is the first impulse, this is the second impulse, and the third one for me is the last one, and it goes from here to here. The third one, now it's completed also, so I have to start again, start over, and now this is the first one, I want a second one and a third.
So you would be selling a rally into the gap that we left today? Okay.
Yeah,
where you're wrong.
The gray area.
Yeah, all right. And how would you manage the risk with stops over 1?
Then, for example, if the price reject 50 level or 71.8, always in Fibonacci, I put the stop loss more or less 1 level upon 71.8 level. Even if it rejects 71.8 71.8 or 50 or 32.8. The stop loss must be over here.
Okay. Got it.
For me.
Okay.
This is how I work. So I'm waiting for it. I'm waiting for it to make a good entrance, to be more comfortable in the market. I know it's difficult,
Okay.
but
If we take out that low and say we're already in the zone, and the
yeah,
next time it rolls over, what would be a downside target if we take out that low at 110.25, last night's low, 110.30, whatever it was?
What do you say?
If we take out the low from last night, what would be your downside target? Yeah, that low. If we take out that low, okay, 109.5 about?
Yeah, 109.57, more or less.
All right, looking forward to that number.
Yeah, also I'm looking forward to. We have to wait right now 15 minutes for the opening bell, so let's see if the movement goes lower, or a rejection over here in 23.6 for me is not a Fibonacci level, a valid Fibonacci level.
Okay, were there?
It doesn't reach even the 38.2.
Yeah, that shows how weak it is if it can't get there.
Yeah, when the price doesn't even.
That's what I'm saying, Alba. People are trapped from Friday. You may have been short before.
People are trapped from Friday. People open longs in Friday, really?
They didn't short the close Friday. There's no book on technical analysis.
But doesn't open a position just in the closing bell, because in the weekend can happen a lot of things. The plane can crash, and Trump can, everything. And for me, it's more probable that a bad thing happen in the weekend than a good thing. So,
well, I'm not even talking about fundamentals. I'm just saying the chart with Friday's close was not, gave you no indication.
Resistance.
The chart on Friday's close
wasn't
bearish. Was it bearish?
No, it wasn't.
Okay, that's what I'm saying. So it wasn't bearish. So people stayed long and woke up to this, and they're trapped.
If they had a long position, it's okay. It's okay. And now I think the stops or the stops with benefits if you have a long position.
I give up trying to express my point on that. I think that people would not have shorted that, would have stayed long, and that the market may not rally much because everyone's expecting it to, but they're trapped, and maybe Mr. Market's going to be a mean guy and not give them a 61.8% rally to get out.
A 61.8% rally? What?
Yeah, from last night's lows. Maybe it doesn't rally back 61.8 to 29.30 or 29.20.
Don't know. I'm now looking for the price structures. Just the price structures. If it loses these price structures, we look for the next one and combine it with Fibonacci in lower time frames, and that's what I'm not comfortable open longs right now because I have these various patterns.
I'm not talking about opening longs. Okay.
So that's what do I have right now, and also.
Go ahead.
I have this one, but it's not reacting. I had this Fibonacci mark that conflued with in USD Swiss franc. I was waiting for a rejection over here, but it's overpassing it. So I'm not going to tell you anything. I had here in 4 hours like a cup and handle inverted, but with this bounce, it can cancel the pattern. So
you have a view on the dollar or euro?
On the dollar, I have here, for example, the dollar index. And I don't know which one is going first, if the dollar index or the S&P or Dow Jones, but this resistance was a great resistance that the dollar index broke,
Mhm.
and right now it's failing. It doesn't just bounce and make,
Yeah.
and it's making, well, right now this one is right now in the support, but we can wait for a fail.
So you're neutral right
Yeah,
now,
I'm
and you're
neutral
neutral.
right
Okay.
here. Yeah, in dollar. Dollar is covering, USD yen is covering the gap. Now it's not a moment to open shorts,
Okay.
but if the price reject or make a lower high from 97.8, it can go down here for the next support
Okay.
over here. So don't know
Okay.
right now with dollar index.
Yeah, that was a pretty weak response to the employment number Friday for the dollar. And
I'm not
pretty weak response today with
weak
risk
response
off.
today.
Yeah, the dollar is not exactly exploding with risk off right now.
I'm not touching CAD, the USD CAD or CAD in general, because we have you have your time at quarter to 2. The Stephen Polos is speaking, and also the OC tonight at 9:30 p.m. and at 12:30 it has the retail sales and the RBA interest rate decision.
Yeah,
so there will be volatility. Yeah. And
how about oil? How about oil, Alba?
Okay. Oil. I have it here. I'm going to open it. I had it. This is the full one. Okay. This is the key. I had here like this is a verse pattern. It was great, but it doesn't advance because of the 50 moving average in daily. So again, we have to wait for
a retrace.
I don't have here an oscillator, but I'm sure if we have here an oscillator, there is a bearish divergence. So after a bearish divergence, I want to wait for a lower high to combine it with Fibonacci. It can go lower than here, but it needs to break the 50 moving average that you can see it has respected
today.
And also, yeah, right now the candle is rejecting, is bouncing or respecting it. So
okay,
I'll wait for lower high. If we want to work with the smallest Fibonacci, is this one. This is the rejecting area. And if we want to work with the biggest one, the area will be this one. So this will be the area to look for a lower high.
Okay. You want to show your blog and where people could reach you,
I don't have
Alba?
it right now. Okay.
Okay.
I have the Twitter.
Well, there's a website address on that. Is that yours? Sala Para Traders?
It's mine.
Okay.
Sala Para Traders is a project. It's a community for traders, and we work daily. We analyze everything. We make directs like you do with these ForexAnalytix, but in a smaller community. And also we made some projections and make analysis. And
you're very good and very disciplined and very beautiful.
Thank you, Dave.
All right, so I'm allowed to say that, right? Okay, it's my show. I could say it. So thank you, Alba. Thank you so much. Yeah, thanks so much for coming in today and updating us on your stuff. Really appreciate it.
Okay, anytime.
All right. Okay, everyone follow Alba. and learn
Thank you,
about the
Dale.
wolf
Any
wave.
question? Any question? I normally don't tweet in English. I tweet in Spanish. But if they have any question, just write me. I can answer them. I normally put charts and clean charts so they can see everything. But if they have any doubts or if they want to write me an email, anything, I can answer them.
Okay.
I'll be glad to.
Thank you so much for your giving spirit, Alba. Have a great week. Good hunting. And everyone in space, thank you. We'll see you tomorrow for Turnaround Tuesday. Don't just count your pips, count your blessings. And we'll see everyone tomorrow. Adios.
Okay, bye-bye.
Bye-bye.